Welcome. In this video, when will Xcn coin price move? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart shows a downtrend line that has been in effect for a long time. This trend has caused the price to face downward pressure every time it attempts to rise, creating a cautious perception among market participants. However, from a technical analysis point of view, such downtrends are not always limited to negative scenarios. On the contrary, these structures often signal the beginning of remarkable bullish movements after a strong breakout. In the current situation, a similar window of opportunity is forming. The price is gradually approaching this falling trend line, and its proximity to this level raises hopes about how strong a possible breakout could be. Trend lines are a reflection of market behavior. This falling trend line is a combination of past highs and lows, and is a technical summary of investor psychology. But it is important to note that every trend is meant to be broken one day. In particular, the fact that the price has touched this trend line several times and that each contact has occurred at higher levels than the previous one indicates that the buyer power in the market has started to increase. This may indicate that the downtrend is weakening and is about to be replaced by a bullish move. When the price breaks this downtrend to the upside, it signals an important phenomenon in technical analysis called a trend reversal. A significant increase in volume, especially at the time of the breakout, could turn this move into a healthy and sustainable uptrend. Therefore, the movements of the price during the approach to the trend line should be closely monitored. High volume and strong candle patterns during the breakout will be among the clearest signs that this technical structure has broken down. Moreover, a breakout of this trend line is of great significance not only for short-term traders, but also for traders who analyze the medium and long term, because breaking downtrends can often lead to changes in direction on large time frames. After such a breakout, many technical indicators are likely to generate upward signals. For example, if indicators such as RSI, MACD, Vortex, ADX, etc. give positive signals after a breakout, it will increase confidence that a new bullish wave has started in the market. However, a trend breakout followed by a retest, where the price returns back to the trend line it broke, indicates that the uptrend is much healthier and technically stronger. Such a move would be a big confirmation signal for investors and would bring more buying interest. For this reason, price behavior after the breakout should be carefully monitored as well as the moment of the breakout. Looking at the current price structure, the horizontal resistance zones above the downtrend can be identified as potential targets. Especially the resistance levels that may be encountered first after the trend breakout will be the areas where the price will test its momentum. However, if these resistances are overcome, it is very likely that the price will move towards higher levels and create new highs. It should not be forgotten that behind every downtrend lies the potential for a turnaround. This potential is directly reflected in the prices when the technical structure deteriorates. In particular, the acceleration of the price as it approaches this trend line reveals that buyers are gaining confidence and the foundation for an upward movement is being laid. If this uptrend results in a breakout, the direction of the market could turn much more clearly upwards and signal the start of a new uptrend. But we can't decide the analysis with trends alone. Let's look at other metrics. Stay tuned. One of the most important technical details on the chart is the strong and prominent support zone just below the bottom of the price. This level has been tested many times in the past, and each time it has been tested, the price has rebounded and turned its direction upwards. Support levels are a tangible reflection of market psychology. Such multiple contacts usually indicate that buying interest in that area is high and that investors in the market consider that level as an attractive entry point. The fact that the price is currently hovering close to this strong support zone strengthens the technical prospects for a potential bounce. In particular, the repeated operation of a support level is a signal that the big players, that is institutional investors or liquidity managers, are active there. Although the price has approached and touched this support zone more than once, the fact that each time the downside sags are quickly recovered and the price reacts quickly confirms how strong this level is in technical terms. In technical analysis, this type of behavior is considered multiple confirmed support, and such supports are considered to be areas where declines end and uptrends begin. The fact that the price is now approaching this solid support level again is in many ways a positive technical pattern, because every previous contact in this area has resulted in a bounce. In this context, the memory of market players comes into play. Traders and algorithms take into account past reversals at this level and wait for a similar reaction to occur again. This leads to increased buying pressure at the support level. In short, one of the fundamental principles of technical analysis, past behavior predicts future behavior, may continue to work here. In the current technical outlook, if the price comes back to this support zone and spends time here, it could open a new window of opportunity for traders. This indicates that the short-term selling pressure in the market is fading and buyers are becoming active again. Stronger buying signs in candlestick patterns, pin closes, or bullish green candles, especially when approaching the support zone, are signs that this support may work once again. In such a scenario, it is highly likely that the price will make a strong bounce to the upside with support from this level. In addition, if the support level works, it is possible that the price may not only experience a short-term rebound, but also set the stage for the start of a new uptrend. As is often seen in technical analysis, movements that start from solid support gain stronger momentum and quickly have a positive impact on investor psychology. This, in turn, leads to increased buying pressure in the market and accelerates the bullish wave. As a result, this strong support level at the bottom of the price is one of the most important technical structures that give hope to the market and create a positive scenario. If this level is retested and works successfully, it is highly likely that the price will start its upward movement again, and this movement will reach important resistance levels in a short time. In this context, from a technical analysis perspective, the fact that the support level has been tested so many times and still held clearly demonstrates the strength of buyers in the market and the upside potential of the price. If a new reactionary move starts from this support zone, it may not only be a momentary bounce, but it may also cause the trends followed on larger time frames to regain upward momentum. Therefore, the importance of this area should not be underestimated, and traders should carefully evaluate this technical opportunity. RSI, one of the important technical indicators on the chart, is currently exhibiting a very meaningful technical structure. In particular, the RSI indicator is showing a clear falling trend line, which has created a clear enough structure to attract the attention of traders. This falling trend has worked as a resistance point many times in the past, limiting the RSI's upward movements. However, given the impact of the current price action on the RSI, there is an increasing likelihood that this downtrend will be broken. If the RSI breaks this trend line to the upside, it could herald a much bigger move higher, not only in terms of the indicator, but also on the price chart. Downtrends on the RSI indicator usually represent periods of market weakness. Along this trend line, the RSI may have been rejected every time it tries to go up, only to fall back down again. However, due to the nature of trend lines, the more they are tested, the more likely they are to break. In the current outlook, the RSI has moved quite close to this falling trend line and has started to push through it instead of running into resistance as it did before. This suggests that the market is starting to build momentum, and the RSI is now preparing to break through its current resistance. If this breakout occurs, it would be a very positive technical signal. From a broader perspective, this downtrend line on the RSI actually represents a shift in investor psychology. Let's follow this downtrend on the RSI. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.